production.
What is poppin'? We're gonna go over some tech stocks. We got Arkk here, and I'm still leaning towards, I zoom out when I look at Arkk, and I'm simply just looking at where would there be peak euphoria and where would there be peak fear. And it's easy to point it out if you're looking at big picture, you zoom out and you just, what is happening on this chart? Weekly time frame, right? I'll delete all these lines out of the way to make things real clear for you guys. So essentially what I'm seeing here is we have a freaking gnarly run in Arkk, right? This is March 2020 to February 2021, 350%. Huge run, massive gains, right? Like 350%, that could like change someone's life depending on how much money that is, right? Like Arkk had a massive trade and we completely retrace right back, which is like, what the heck, man, is happening in these markets? And it's been over a year of a bear market in Arkk, just down only for a year, 69% down from the highs, probably more if I put the magnet on. But when we're looking at overall, right, like if this is going to continue its uptrend, it's likely that this area is an area of fear where people are just panicking and selling. No belief in growth stocks right now. Long term, this could be a hilarious play. That's the way I'm looking at it. We have a massive retrace right back into this zone. The risk to reward opportunity is pretty decent here. If you can mark off, right, where is it acceptable for you to say, I don't want to go down any further? Like, even if you were to risk 20%, 25%, like, it could definitely go down another 25%. But in terms of how much you can gain for the long term, right? What happens if you just dollar cost average into a large position? There's a few different ways you could play it, but simply looking at this chart, that's how I'm looking at it. Euphoria, we're getting into the fear scale down here. People puking out their positions. Eventually, this will be somewhere back at its median. Now, if we look at the Fibonacci retracement from the very high to the very pullback, right? The very furthest it's pulled back to. Over this year and a bit, the median will be this 0.5, which is $100. That's a doubler, right? So there's solid opportunity in this name. Like, I wouldn't sleep on it. Like, tech stocks are getting pounded, of course, but where there's like mass chaos is where the opportunity will like come in, like super discreetly. Like, when nobody wants to invest, when nobody and everyone is scared, is when the opportunity is here. So I wouldn't really sleep on Arkk. Now, when we look at PLTR, I think we could look at this range here now, right? We could look at it as a range right from this level. Put the line out there. We're almost back to IPO levels, which was September 2020. So I'd be looking at this range anywhere between this $10.30 to $14.40. I think that is the range. It looks like we're playing sideways a bit. But to be fair, right, if all this bearish action continues, we'll be looking at this as a bear flag on the weekly time frame, which is not good, right? The bear flag indicates that we should go lower. So there's two outlooks here, right? There is definitely a bearish outlook, but there's also a bullish outlook that we're just basing in this range from $10.30 to $14.40. And now could be a time where, you can gather shares at this level if it is going to turn around and make its way back up to the like mid 20s, where majority of the buying has probably been over the past little bit. Let's look at the volume profile. Yeah. So volume profile states that the average buyer was at 25, and that's where the most amount of shares are being held. If we can make it back up into that range, these levels, again, that's like over a doubler, right? So there is definitely opportunity. Don't just sleep on it because, oh man, all stocks are getting bodied. You got to look at the other side of it, think longer term, and then also think about how you're going to manage your risk. Like, you don't have to go all into a stock. You can diversify however much money you have into multiple different stocks. I mean, do your thing. I'm not a financial advisor, but that's definitely the smarter thing to do instead of just going balls deep all in on a stock hoping for a massive return, if you feel me there. So again, we got Sklz, right? I don't want to sleep on this one. We're sliding out sideways, and this lower trend line, we're starting to get nice. Today was a big day. We had 9% day, and that's off the lows here. We've retraced, filled that gap. I want to see hopefully a bullish earnings that will drive us back up into this 350 range. Remember, we want to break this zone down, so we can't just have that like and completely forget about it, if you see what I'm saying. We want to slowly curl back up into this range, break this zone down, and then get that push up higher. So, I mean, is that going to happen? We don't know, but bullish divergence is for sure in play on this chart. When we look back at it, it is for sure in play. We got the lows of the candlesticks going lower and the lows of the RSI going higher. Bullish divergence, it takes a while to play out, but it is usually a solid signal to go long. We got Aapl. So when we look at Aapl, easy peasy in my opinion. I'm just looking at support and resistance, right? Like, I don't want to overcomplicate such a simple stock. But again, this zone has been acting as support, and we're starting to see the hammers, right? Large piercing candles, hammers, bullish engulfings in this range. Like, you want to see those at support. It's showing that there is a rejection of sellers and that buyers are starting to step in, right? We beat earnings. Dividends are about to pay out. Increase in bull volume on the day. Like, you got to like it. It's above average volume. Overall, this could be an area to expect like a potential move to this upside 180 range once again. Again, it'll take a few weeks to play out most likely, but from a simple support and resistance perspective, this is meant to be a nice time to gather shares. AMD. Now, when I'm looking at AMD, I don't know why, but it's, in my opinion, this is a solid buy. Don't listen to what I'm saying just because I think that. I think it is because why I think it is because this stock took forever, right? Since mid-August 2020 or late August 2020 to break this 95 zone. We break it and then we shoot right up to the 160 range, and we have a very structured consolidation back into this 80 to 95 range. So $89 for AMD long term might not be a bad play. Again, the uptrend is so intact. You could look at this as just like a weekly higher low. Like, if we're looking from a trend perspective, just simply doing something like this where we have this range, we break up, and now this could be a weekly higher low if we're looking at the larger scale. But then again, it's been in a few weeks of a downtrend, many weeks you could say, right? It's been since late November. So when we look at it, it's a downtrend if we look at this daily time frame here, right? Something like this. When are we going to break that downtrend? It's hard to tell when that's going to happen. But when we're looking at this from simply gathering shares long term of a stock that was once $160 a share in a sector where, you know, we're never not gonna need semiconductors. Like, we're never not going to, if you really take that in. It's bullish. You gotta like AMD and Nvidia as well. So Neo, right? We're gonna look at Neo for a bit here. When I look at Neo, I look at this level and I think there's some potential here. So it was our resistance back here. Let's zoom in. Was our resistance at one point. We break up over it, acts as support, and then we go for a huge run. So January 2021, we mark the top at $66.66, and now we've had a huge retracement back into this $17 or $16 range. Like, damn, dude, like there's just so many names that, like, come on, of course they have opportunity. Like, you can't sleep on this. I think it's worth looking into for sure. I'll be looking at this trend line we have here and see when do we break above it. That's been holding us back since November 2020. And then once that happens, we can start to look at other ranges. Like I'd like to look at up here, right? We've had some support, previous support, and then it turned into resistance. And that's at $32.14. Support, 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 support. We break below, resistance, resistance. So again, it'll take some time, no doubt. There's a gap up here as well. So I'd also be looking at this level here, which is the 26.26 level. If we can break out, I'd be looking for us to get that push to the upside potentially and battle that 26.26 range. So NIO's a pretty volatile mover. It moves quick and it moves nicely. So if you're looking to long a like electric vehicle name, NIO or Tesla is definitely the play. And we got Nvidia as well. So I like Nvidia. It's again a huge semiconductor name, and I try to keep it real simple. Where's the supply? Where's the demand zones? Where's support? Where's resistance? Mark those out, and then we want to watch and see what's going to happen. Like right now, this lower trend line seems to be pretty active. So I'd expect there to be some sort of a bounce coming in the coming days. And that's the breakdown for this week on the tech stocks. Peace, guys.